Today's Nifty move was not a normal fall. This was a controlled trap designed to mislead both buyers and sellers. Welcome to Decode Smart Money, where we don't chase indicators, we track institutional footprints. And if you want to understand where the market is heading next, stay till the end because tomorrow's levels are critical. Let's start with the bigger picture. On the higher time frame, Nifty is still in a broader recovery phase after that sharp fall from the 25,900 zone. But look closely, price is still trading below the moving average on the chart, and that moving average is sloping downward. This tells you one simple thing: the trend is still weak and rallies are getting sold into. Now today's closing is around 24,170, and you can clearly see resistance sitting near 24,300 to 24,400 zone, while support is around 24,100 and below that near 24,000. So overall, this is not a clean trend day. This is a controlled bearish environment with pullbacks. Now let's break down the intraday story, because this is where the real game happened. Market opened and immediately showed weakness. On the 30-minute and 15-minute charts, price stayed below the moving average throughout the day. Every time price tried to bounce, it faced rejection near that dynamic resistance. This is very important because when price respects a moving average like this, it means institutions are using it to sell, not to buy. Now look at the early session. There was a small push upward after the open. This is where most retail traders thought, okay, reversal aa raha hai. But what happened? That move failed. That was your first trap. Smart money used that bounce to create liquidity and then pushed the market down again. Then comes the mid-session structure. You can clearly see on the 5-minute and 1-minute charts, lower highs, lower lows, continuous structure breakdown, no strong bullish candles, no follow-through buying. Even when price bounced around 1 p.m., that move again got rejected near the moving average. This is classic lower high formation followed by continuation, and this is where second trap happened. Late buyers entered thinking breakout, but price reversed again. Now observe the price behavior carefully. No impulsive bullish move, but steady controlled selling. This tells you this move was not random, this was systematic distribution. Also notice the candles, multiple small bodied candles with downside follow through. This shows controlled pressure, not panic. Smart money doesn't panic, they distribute quietly. Now let's talk about where traders went wrong. Buyers kept trying to catch the bottom again and again, but they ignored one thing. Price was below moving average. Structure was bearish. So every buy was against the trend. And sellers? Late sellers entered at the bottom, near 24,150 zone. And now they are at risk of a bounce. So both sides got squeezed. Now the important question, what next for Nifty? For tomorrow? 24,100 to 24,050 is a very important support zone. If this breaks with momentum, then we can see continuation towards 24,000, even slightly below. But if market holds this zone and reclaims 24,250 to 24,300, then short covering bounce can come. But remember, until price sustains above that moving average, any rally is still a sell on rise opportunity. So Nifty prediction for tomorrow is simple: below 24,100 bearish continuation, above 24,300 short-term relief bounce, and Bank Nifty will likely follow the same structure. Now the lesson from today: don't fight the trend. If price is below moving average, assume weakness. Don't chase small bounces. Wait for confirmation. And most importantly, avoid emotional entries in intraday trading, because market doesn't reward prediction, it rewards patience. If you found this breakdown useful and you want to stay ahead of these smart money moves, make sure you subscribe to Decode Smart Money and turn on the bell icon, because tomorrow these levels are going to decide the next big move.